The moment you realize what's happening in silver right now, you will understand why the market is about to change in a way most people aren't too prepared for. This isn't just another price prediction or a random headline. This is a squeeze, a real squeeze, and it's already starting. Imagine the world's biggest buyers suddenly needing physical silver, and the supply simply can't keep up. That gap is where prices explode, and the next few months could be the turning point. If you want to stay ahead of the crowd, listen carefully because what I'm about to explain is not what the mainstream is telling you. Before we go deeper, if you're new here, welcome to Silver Reset. Hit like, subscribe, and ring the bell so you don't miss the next update, because this is the kind of market moment that changes everything, and I'll be covering it in real time. Now let's talk about why the Great Silver Squeeze is here, and why prices are likely to surge much higher than most people expect. First, let's clear something up. Silver is not just a precious metal, it's also a critical industrial metal. It's used in electronics, solar panels, medical equipment, and countless industrial processes. When global manufacturing picks up, silver demand rises fast, and that demand is not easy to replace. But here's the key point. The world's silver supply has been shrinking. Mines are producing less, and recycling is not keeping pace. Meanwhile, demand is increasing, and that combination is what creates a squeeze. Now add to this the fact that a lot of silver is not really in the market at all. It's held in private vaults, it's locked up in ETFs, and it's held by institutions that are not willing to sell. So when buyers show up, there isn't enough physical silver to go around. And this is where the story becomes urgent. The paper silver market, the futures market, has been used for years to satisfy demand without delivering physical metal. But that system only works until it doesn't. When the gap between paper claims and physical supply becomes too large, the system breaks, and prices can spike quickly, because the only way to settle the demand is through physical delivery. And that's exactly what we are starting to see. Now, let me tell you why the squeeze is not a distant possibility. It's already underway. You can see it in the way silver inventories have been dropping in major exchanges. You can see it in the way large buyers are quietly accumulating physical silver. You can see it in the way premiums are rising on physical silver compared to paper silver. This is not a theory. It's happening in real time. When premiums rise, it means buyers are willing to pay extra just to get physical metal in hand. That is the moment when the market stops being about paper and starts being about reality. And reality is always more powerful than speculation. So what triggers a true squeeze? It's when the paper market cannot keep up with physical demand. When too many investors want metal and too little is available, the price becomes a reflection of scarcity, not just sentiment. And that's where the big moves happen. You might be wondering why this is happening now. There are a few big reasons. One is global industrial demand. The world is building more electronics, more solar infrastructure, more medical equipment, and all of these industries need silver. The second reason is central bank and government policy. When governments print money, they push investors toward hard assets. Silver is one of the most undervalued hard assets on the planet. And when people realize this, they rush in. The third reason is the rising fear of inflation and currency weakness. Silver has historically been a hedge against inflation, and when people lose confidence in fiat currency, they turn to real assets. But the most important reason is that silver is still priced like a commodity, even though it behaves like a currency in times of crisis. This mismatch creates an explosive situation when investors finally realize what silver truly represents. Now let's talk about the paper versus physical issue. The paper market is where most investors never look. It's where contracts are traded, where futures are settled, and where price manipulation can happen because no physical metal needs to change hands. This has allowed large institutions to dominate the market for years. But when physical demand increases, paper contracts can't keep up. And when the market reaches that point, paper prices start to disconnect from real-world supply. This is where the squeeze begins. Think of it like this. If you have 100 people claiming they own the same piece of silver, only one person can actually take delivery. So the system depends on most people never taking delivery. As long as that remains true, the paper market can keep functioning. But if enough people decide they want real metal, the paper market collapses under its own weight. That's the exact risk the market is facing right now. And that's why this squeeze is so dangerous for the paper system. Now, let's bring in another critical factor. China. China has been quietly building its silver reserves for years, and it's become a major force in the global silver market. Chinese demand is not just about jewelry or investment. It's also about industrial use and strategic reserves. When China moves, the rest of the world feels it. And right now, there are signs that China is tightening its control over physical silver. This matters because China's actions can influence global supply and price discovery. If China continues to absorb physical silver, less metal will be available for the rest of the world, and that creates a supply shock. When supply shocks happen, prices don't rise slowly. They spike. And that's the kind of move that can create a market reset. Another reason the squeeze is intensifying is because the major silver ETFs and vault holdings are not as liquid as people think. Many investors believe that ETF holdings mean there is plenty of silver available. But ETF holdings are often based on paper-backed shares, not physical metal in hand. And even when physical metal is held, it is not always available for immediate delivery. When investors start demanding physical metal, they find that the available silver is not actually available. That's when premiums rise, and that's when prices explode. It's a slow buildup. But once it reaches the tipping point, the move is fast and dramatic. That's the nature of a squeeze. It doesn't happen gradually. It happens when the market realizes the supply problem is real and irreversible. Now, you might ask, if this is so obvious, why isn't everyone talking about it? The answer is simple. Most people don't understand how the silver market works. They see silver price charts and think it's just another commodity. They don't realize that silver is a dual-purpose asset, both industrial and monetary. They don't realize that the paper market can mask real supply problems for years. And they don't realize that when the squeeze hits, the price will move faster than anyone expects. The mainstream media also avoids this topic because it challenges the narrative of stable markets, when the truth is that the market is built on fragile foundations, and those foundations are now cracking. So what should you do right now? First, understand that timing is everything. The best time to position yourself is before the squeeze becomes obvious to everyone. Once the squeeze is obvious, prices move so fast that many investors miss the opportunity. This is why the next few months are critical. Second, focus on physical silver, not just paper silver. Physical silver is the real asset. Paper silver is just a claim. And in a squeeze, claims become worthless. Third, diversify your holdings. Don't put all your money into one form of silver. Consider coins, bars, and trusted storage. And consider your risk tolerance and time horizon. This isn't financial advice, but it is a strategy that aligns with how real markets behave when a squeeze happens. Now let's talk about the psychology of a squeeze. A squeeze creates fear and urgency. It forces buyers to act quickly because they realize the metal is disappearing. This fear creates a feedback loop. As prices rise, more people rush in, and the shortage becomes even worse. This is how sharp price spikes happen. It's not just supply and demand, it's also human behavior. And this is why market timing matters. People who wait for perfect confirmation often miss the move. The smart strategy is to recognize the signs early and act before the crowd. And the signs are here. Rising premiums, falling inventories, increased industrial demand, and growing awareness of the paper versus physical problem. These are not small signals. These are the building blocks of a major market event. Now here's the part that most people miss. The silver squeeze is not just about price. It's about a reset in how the market functions. When a squeeze hits, the market changes. Investors stop trading paper and start demanding physical metal. Exchanges may tighten delivery rules. Premiums can rise sharply, and the entire market structure can shift. That's why the term silver reset is so important. This is not just a price movement. It's a structural shift. And once the market shifts, it doesn't easily go back to the old way. That's why the next wave of silver buyers may never see the same pricing dynamics again. This is why being early matters so much. Now, I want you to imagine a scenario. Imagine the silver market suddenly becomes driven by physical demand. Imagine buyers trying to take delivery and finding the metal isn't there. Imagine premiums rising and the paper market losing credibility. Imagine the price of silver moving faster than anyone expects. This is not fantasy. It's exactly what happens in a squeeze. And the reason it's so powerful is because silver is still relatively cheap compared to gold, and compared to its industrial value. This means there is still room for major upside. The market is undervalued in the face of real scarcity. That combination is explosive. As we get closer to the squeeze, you'll notice more headlines, more people talking about silver, and more experts suddenly predicting a surge. But the real move happens before the headlines. The real move happens quietly, when the market starts tightening and investors begin to sense that physical silver is becoming scarce. That's why it's important to stay informed and not rely on mainstream coverage. The mainstream only covers the story after the move is already underway. If you want to be ahead, you have to understand the market mechanics, not the headlines. Before we wrap up, I want to remind you of one key truth. Silver is not just a speculative asset. It is a real physical resource that is essential to modern life. When the world needs more silver, and the supply cannot increase fast enough, prices rise. This is a natural economic reality. And right now, the conditions for a squeeze are aligning. That's why I believe the great silver squeeze is here. It's not a question of if, but when and how fast. And when it happens, it will change the market forever. If you found this video useful, please leave a comment below with your thoughts. Do you think the squeeze will happen in the next few months, or will it take longer? What signs are you watching? And if you know someone who needs to hear this, share this video with them. The more people understand what's happening, the more informed the market becomes. Thank you for watching Silver Reset, and stay tuned because the next update could be the most important one yet.